Excellent. Thank you so much, and thanks for having me back on. Really appreciate it. Glad to be part of the third anniversary event. Welcome, everybody. Glad to be spending a Saturday morning with you. This morning, I want to talk about day trading with you. It's something I used to do a lot earlier in my career, and I do a little less now due to my schedule and so on. But it's something that I think is very timely for the markets we're in. You know, we've seen a lot of volatility, and more recently, we've seen some sideways markets, and there are opportunities with that that are can be pretty amazing, and that's what I want to talk to you about today. Give me just a quick second to get my thing organized here. There we go. Excellent. All right. So please do remember that trading can be risky. Please don't trade with real money until you're completely comfortable with the system or information you're trading on. A bit about me. I am Vince Vora. I'm the head trader here at Trading Wins. I have been trading for 30 years. What you see on the screen are just a few trades that we highlighted for our members over the past year, but the reason I left those on there is I really don't want you to focus on there. One of the things with day trading is many people associate it with very quick and large profits, and I don't want you to think that way about day trading. I'm going to expand on this as we go through, but it's more about being risk averse than it is about profits. Okay, this is just one of the systems that we've put together over the years. We have several, and now many of those are traded by retail traders such as you, as well as hedge funds and money managers. I always ask the same poll question before every presentation. Please, have you seen me present at an event or a webinar such as this before? Yes or no. Please make your selection or type it into your chat box for me. I'm just going to grab a sip of my water and we'll move on. I am going to spend very, very little time on my slides this morning. Most of it will be on my charts, okay, walking you through this setup. Appreciate it. Looks like a number of people. Well, I'd say there's a few more no's than yeses this time. Normally it's about a 50-50 split, but that's great. Thanks for joining us again, everybody. Well, in today's presentation, I will spend just a couple minutes talking about the challenges of day trading. Then I will highlight 4 of the keys that I believe are absolutely vital to your success as a day trader. Then we will move to the charts, and I will walk you through this setup step by step. By the end of it, you'll be able to walk away with this system. I will teach you all of it from entry to exit, and hopefully at the end of the presentation, we'll still have enough time for Q&A. So day trading obviously can be challenging. It really can feel like this, but I really wanted to ask all of you, how many of you have actually tried it and failed? Please don't be shy to participate here. We've all been there. None of us are born successful traders. And yeah, so thanks, Thomas, Richard. I see many of you. It can be very, very difficult, but it doesn't have to be. And that's the whole point of this presentation today. You know, 4 of the key items that you have to keep in mind and that you really have to get on top of if you're going to be a successful day trader. Number 1 is discipline. It really is, especially trading a system like this that is solely based on technical analysis. Your job as a technician is to find a pattern that repeats itself, spot it, and then execute on it. And it's that discipline that will make all the difference. Also focus. You know, when you sit down to day trade, block out all the noise. You know, turn off CNBC if you can. Sure, it's entertaining. I love to watch it just for entertainment, but trading on news is the last thing you really want to do. All you need to do is look at your charts, find that pattern, and execute. And you know, I'll talk a bit more about this later on, but I really want to get to the charts. And here's the main point: minimizing risk. As I mentioned earlier, day trading is not about, you know, fast profits and becoming rich overnight. That's not how you're going to get there. Your focus should be on minimizing risk right from the very beginning. And I'll show you how we do that with the system, and also to think strategically. And what I mean by that is you need to know exactly what you're going to do even before you get in that trade. You need to know where your entry is going to be. You need to know exactly where your targets are going to be, and what exit strategy are you going to use, or where your exit's going to be placed and your stop be placed. And we'll cover all of that. The real benefit here is you want to be a step or two or move or two ahead of the markets, is what I'm trying to say. That's the whole point. You want to put the odds in your favor and try to control this as much as you can. So to recap, a few of the things that you should do as a day trader is, number one, track your trades. What gets measured gets done. One of my mentors very early on taught me this, and it is so true. So once you start your journey on day trading, if you haven't already, you should keep a log and keep a journal, and periodically go back and review your winning trades and your losing trades, and then look and find the commonalities in between it. You will quickly be able to spot where you're going wrong and where you're going right and make those adjustments. It's absolutely crucial. And consistency is the key. As I mentioned earlier, that discipline, you got to build the right habits, and you have to find that pattern, and you have to execute on it. That's what you should be focused on, not the profits. The profits will come. Don't think of it as money. Think of it from a standpoint of execution. Am I executing the trade appropriately? And once you can say that over and over and over again, you're going to be doing very well. That is what you need to become a specialist as a day trader. So enough of the slides. Let's get to the charts, and let me walk you through this setup. So we're going to start out with a clean chart. I'm going to add the indicators on one by one, so that you not only are able to walk away with the list of indicators and their special settings, but you'll know exactly how to add these on. So I'll start with a 5-minute chart here. Now I will say that since this setup is based on technical analysis, it will work on any time frame and any market, but I've been using this on the lower time frames, the 5, the 15-minute, and from time to time the hourly. Okay, so let's start off with that. Now, there's a couple of indicators that I have on my chart layout all the time, and they're part of almost every strategy I have, and the most common one is the 20-period simple moving average. So I'm going to put that on the chart here. Let me just find, there we go. So the 20-period simple moving average is probably the most popular moving average out there. It's used not only by retail traders, but by most pros out there as well. So it's heavily watched, and it is the most common, and I think it's very helpful, especially when it comes to judging momentum that you might have behind that trade. You can judge momentum by the slope of the candlesticks or the price bars, but the 20-period moving average does that for you. But the other thing it does very nicely is that whenever there's a pullback or a consolidation mode, if the moving average maintains its slope, then that helps you understand that this is just a temporary pause in that stock before a continuation of that move. And we'll get more into that as we go through. But again, this is a 20-period simple moving average based on the close. Another indicator that I use quite often nowadays is the Ichimoku Kinko Hyo indicator. Now, we use a very stripped down version. Let me go in and show you. First of all, we do not touch the settings. We will use the default settings of 9 and 26, but this has 5 different portions to it: the Tenkin, the Kijin, the Span A, Span B, which is the cloud portion, and the Chiku. What you want to do is go in and uncheck the Tenkin, the Kijin, and the Chiku lines. You want to remove those, okay? Those really cloud up your screen. You only want the cloud portion. Let me plot this on and show you what it looks like. Now you have these shaded areas here. So the other 3 lines that we removed are other moving averages. They're calculated a little differently than moving averages, but they would really make your chart look like a mess. So what we're going to do is use this cloud for trend only. So in other words, when the price bars or the candlesticks on the moving average are above the cloud, we consider that an uptrend. When they're below, it's a downtrend. When one or both are overlapping, it's a sideways market that we don't want to touch. Okay, so now with the shorter time frames, rarely do you get those consolidating periods, but from time to time you still do. Now, here's a couple of other indicators that I want you to put on your chart. And the first is the MACD. Now, the moving average, convergence, divergence, is very popular. I like to use the histogram version. I'm going to add that on here. Now, here's the key, the settings. We're going to change this dramatically. Normally, the default settings for the MACD are 12, 26, and 9. We want a much more responsive MACD, and for the lower time frames especially. So we're going to change this dramatically. We're going to make the fast length here we're going to move it from 12 to 4. Okay, dramatic change. Here's the biggest change though, 26. We're going to change 26 here to 5. Okay, so we're going to have 4 and 5, and then here, the last one, the MACD length to 13. So instead of 9, 26, and 12, we're going to have 4, 5, and 13 for the MACD. Okay, and then we're just going to thicken this up a little and add that on our chart. And there it goes. All right. Actually, let me change one of the colors here so you can see this a little better. Let's change this to blue maybe. Let's apply. Yeah, it's a little darker. Better. Okay. And there's also another one, and that's the CCI. Now, the CCI, Commodity Channel Index, is normally used to identify overbought and oversold conditions. We're going to use it completely differently. We're also going to use a much different setting. The default setting on most platforms is 14. Again, we want a much more responsive indicator. We're going to move that to 5. Okay. We're also going to remove the overbought and oversold lines on here. Okay. But we do want the 0 line in there. Okay. We're going to change that color to black, and we're going to change this to red and thicken it up a little. All right, this is starting to take shape. Let me just adjust it a little. There's one more we're going to put on, and I'll put that on in a few minutes. Let me walk you through the entry details, and then the last indicator we're going to put on is going to help us with the exits. Okay, so let's start talking about this. Now, obviously, when you're trading with trend and momentum on your side is a real key. Half the battle's already won before you even place a trade. So here's how this is going to work. So here, let's take a look at CTRP, and let's look at a short trade here to begin with, because this has been following the last few weeks here. And have a look at this. As soon as we come through the cloud, obviously we go into bearish mode. Okay. Now that 20-period moving average is sloping lower. I normally look for about a 45-degree slope or better. The more significant the slope, the better. So that's telling you there's some pressure to the downside. Now the way you want to look at this is you want to spot areas to get in. Obviously, once we cross that cloud and we have that downward slope, we expect this to continue to run for a while. All you're trying to do is spot an area where you can jump in and ride that wave. So I'm going to zoom in here so you can see it a little clearer. And this is what I want you to focus on. So as soon as you come through and you have that slope here, normally any bit of a pause or any pullback or sideways consolidation are your opportunities to get in. And what you want to spot is this. You want to look for an area where the MACD goes from positive to negative. I hope you can all see that. Let me just zoom into this area and then I'll zoom back out. You see how the MACD here, the bars are above that 0 line? And maybe I should thicken up that 0 line for it's not showing very well here. Let me go in there and actually I don't have the option of doing that. Okay, that's okay. Right here, as soon as you see them go from green to red. So this is the candle right here that's associated with that. Now, that's not the only condition. The other thing that has to be on your side is that the CCI needs to be below that zero line at the time as well. So what you're trying to do is find that point in time where both are negative, okay? Both are below zero here. So that's this candle here. Let's highlight that for a second. Here, okay? Now let me zoom back out for you, okay? So it's that simple. That's your entry. Once you are below the cloud and you have a downward slope, you're looking for that point in time where the MACD crosses from positive to negative, and your confirmation is if the CCI 5 is below that zero line, okay? Then a trade, you know, 1 tick or 1 penny below that candle, that setup candle, is your time to get in, is where you would short, whether you buy a put, whether you short the stock, sell the call credit spread, whatever you want to do, okay? Now, you are going to ride that and here's your exit. This is where we want to add in the other indicator. Now, I'm sure many of you have heard of the parabolic SAR. It's a handy indicator used for exits, but the setting normally is 0.08 and 0.9. Okay, I had already saved this as a default on mine. I tighten it as much as I possibly can, and it's allowing me to tighten it to 0.02 and 0.2. So that's as tight as you're going to get. Let's add this on here, and we have these dots. These dots here are the parabolic SCR. Basically, it acts like a trailing stop. Okay, so here's our entry, and you'll notice that the stop is pretty much aligned with the previous pivot high here, which is always another great area to put a stop initially. Now, you can tighten up your stop if you like initially off here, okay? That's a matter of personal preference, but usually the parabolic SCR does a very good job, and when you tighten it up that dramatically, what happens is through the life of the trade, it just gets tighter and tighter and tighter until you see an exit. Now, right in this candle here, it's hard to see. Let me zoom in for you. Right, can you all see that little dot right below the body of this candle? Okay, what happens is when price trades above the level of that dot, the dot moves to the other side of the candle. In this case, it's here. Now, this was a one candle blip, then it moved back here because it moved back below. Okay, but here's what you want to look for. Okay, let's move this back. And here was the entry. Zoom in again for you. There we go. Right here was the setup. Okay, and there's your parabolic SAR. So once you enter here, you're going to remain in that trade up until that little dot shifts from above the candles to below the candles. That's your exit. Okay. Now, so in this case, you would have entered from around 48.5 here short, and you would have been out right around here. The level that was breached was right around 48 there. And now remember, this is a 5-minute chart. Okay, and then you can enter again once you go negative again on the MACD, only if you're negative on the CCI again, and then once again follow it until those dots move from above to below here. Okay, so whenever price crosses the level of that dot, that is when it will shift. So if you're trailing your stop, you can use the price level of those dots as your stop level and just trail it every bar, and it gets tighter and tighter as you go. Okay, works very well, has been working well recently. Let's look at a few other charts here. Again, here we move below that cloud, we have momentum lower. That's what you want to see. Now, one of the things you can do here to whittle down the number of trade candidates that you have at any one time is to use the ones with the strongest slope in your favor. Okay, so here, you know, you could take a trade in this area as well. They do work. Look at this one right here, where you go from negative to positive. From positive to negative, and the CCI is well below that zero line right here. Okay, and what happens next? The stock collapses. Now look at the parabolic SAR. It gets tighter and tighter and tighter and tighter, and this would have been your exit. So you would have been in from up here. There's your setup bar right up here near 42.79, and your entry would have been just below that, the low of that candle, and your out would have been way down here. Okay, so very, very simple and easy to follow. Now, works the same on the long side, only in reverse. In other words, you want to be above the cloud. You want to have slope on the 20-period moving average in your favor. You want to wait for some kind of retracement or consolidation, just a pause. Whether it's 1 or 2 bars or much more than that really doesn't matter. Here's the thing. As soon as you go from negative to positive on the MACD here, and of course, your confirmation is a positive CCI, CCI above that zero line. Okay? Then you mark that setup candle, which is this one here, this first larger green candle. Mark the high of it. If you get a trade 1 tick or 1 penny above the high, you can go long, and you would remain in until that dot is breached. The price on that dot is breached, and that would be your exit. Okay, very simple. Any questions just on that setup? I want to make sure you have it all down. Now, there's a couple other things to look at here. Number one, sorry, Tasha's saying, can you OCO bracket option? Well, I want to cover a few other things here. If I have time, I will absolutely go into the option chain for you. Thanks, Randy. He says it looks good so far. It really is. It's very simple and very easy to follow. What I find too is that parabolic SAR helps you remain disciplined, because one of the biggest challenges for most traders is once they get into a trade is not getting scared out of it. And something like this where, you know, it moves in your favor, and then look, it starts to retrace, and you get 3 bars against, you're thinking, oh, I'm going to give up all my profits, and you panic out. Having that parabolic SAR that's tightening all the way through here really, really helps you maintain that discipline, and that's what you should focus on. Remember, this is not about how much profit am I going to make on this trade. That's not the thought you want going through your head when you first see the setup. All you want going through your head is, you know, are we below the cloud, right? You know, do we have momentum in our favor? Is the MACD turning from positive to negative? Is the CCI confirming it? You know, just go through the steps. You know, make a list for yourself with a bunch of check boxes to check off, and make sure you can check them all off before you get into a trade. Let's look at a few more, and there's a couple other things that I want to look at. Just give me a second to take a sip of my water here. All right, let's have a look. And feel free to throw out some symbols if you want. We can have a look at a few. Now remember, I'm using the 5-minute time frame, but one of the things you can do with this, and actually I'll show a couple other stocks that I want to use as an example here for you. Look at INCY, right? When you look at this on a 5-minute, you're thinking, wow, that's an ugly looking chart. How am I ever going to pull off a trade in there? That's a great question to ask yourself. And really what it means is you should not be trading INCY on a 5-minute chart. So most traders think of, what's my favorite time frame? If it's 5 minutes, I'm going to trade everything on a 5-minute chart. That's not always the best way to do things. You know, if you pull up a 5-minute chart, you want to stick to the stocks that look good on a 5-minute chart. In other words, they are very predictable. They trend well. Look at INCY on a 5-minute. Let's look at it on a 15-minute. Still not really good, right? Let's look at it on a 1 hour. And now it looks a little better, right? Now there's some trends here. And let's look at Bed Bath & Beyond, for example, on the hourly. Very predictable. Nice, easy swings, right? So if I looked at this, yeah, I could trade this on the 1 hour, no problem. Look at these trades. So we come through the cloud, we have momentum on our side, we wait for the MACD to turn negative, right in here. Is the CCI confirming? Yes, it is. It's way down here, way below zero. Wait for a trade below that low. There's the parabolic SAR that takes us all the way down here. Okay, nice and easy. If we switch time frames, let's go to the 15-minute. You know, not as smooth. There are opportunities in here, but for the most part, not a great time frame for BBBY. How about the 5-minute? You know, a little better. You have stretches in here, but certainly not in here. And so part of this is to keep you out of these choppy periods. You want nice, strong trending stocks. And the time frame isn't as crucial. So always make sure that it's very predictable on the time frame that you want. Your best bet is to build a watch list of stocks that trend properly on one time frame versus another. And I'll tell you how a bit later one way to do that. And that's really the key, is to make it easy on yourself. Let's look at something like Tesla. Now, here's one thing I will share with you. That if you want stocks that trade nicely on a particular time frame, the lower the time frame, the higher the price the stock, usually you will find that. Let me show you something. If you go and pick an index, for example, like the NASDAQ 100, all right? Let's sort by price, and we'll sort from most expensive to least expensive. And let's just start at the top here, okay? Now, let's lower the time frame to 1 minute. How many of you trade on the 1 minute or have traded on the 1 minute? It's very fast. I don't recommend you start there. But once you get comfortable with the setup, any time frame is fine. Great. Giselle says she has. So, yeah, several of you. Great. So have a look. Let's start with PCLN. You know, do we get trends here on the 1 minute? Let's look at Google. Yes, we do. Nice. Nice right here. Right? Amazon. You know, we had the huge gap here, which kind of ruined the chart, but there's certainly trends. ISRG, not that great. REGN, yes. Nice trades all through here. BIIB, same. Look, if you zoom into these areas, okay, let's look at some of these. So we come through, we gain momentum, we have a little bit of a pause here. That's where the MACD goes positive. Then we go negative again, right? Right around the 285 area. CCI is confirming. You jump in, you ride it all the way till this bar here when it crosses the dot, and the dot appears up below. That is right around 282. So from 285 to 282, a $3 move, but that's within minutes, right? These are 1 minute bars. It consolidates again and then flushes again, and you have another opportunity here to make another couple bucks. So over the span of a day, even if you're watching just 4 different securities, there's multiple opportunities. You walk away with several dollars of profit. Here's ORLY. Again, nice, strong trends. Because these are 1 minute charts. Look, all we go from is the opening of the market, 9:30, right, to about 11:30, the first 2 hours of the day. Then the afternoon goes flat. Who cares? But by the first 2 hours, there's been multiple trade opportunities in here. So it's an easy thing to do. You can build your own watch list and do it that way, or you know, just pick an index like that, sort by highest to lowest, and run through and find the ones that are currently trending. It's very simple. Let's look at the SPYs. Now the SPYs have been flat lately. There's been a lot of signs, just like the Dow and the NASDAQ overall. On the 1 minute chart, sure, you're going to get opportunities like in here. Okay, and this is the key. You come through, and you know, if you come through that cloud with that moving average already sloping, it's an indication of an extended move in that direction. So you can use that as well. Okay, but always look at it. Look, if we look at the SPY on the 5 minute, it doesn't look very good right now, does it? That's because if we go to the daily chart of the SPYs, look, since early July or mid-July till now, it's been flat completely. So unless there's a big range in there, you're not going to get many opportunities. In these days in here, the second week of September, when there were wide range candles, sure, in there you would have got opportunities trading on the 1 minute, the 5 minute. But during these small range days, you're not going to get much action. So you got to go where the action is, and that's why making a list like this for yourself and watching a few of the bigger names is very, very easy. Now, how many of you don't day trade but invest longer term? Even with monthly charts, dividend stocks that you hold for a long time. This is based strictly on technical analysis. You can use it just the same. Let me show you on the monthly time frame, okay, how it works. Look at the spies here. Okay, we crossed that cloud, we pulled back. Look, right in here is where the MACD went positive. Okay, right in here. This was January of 2012. Okay, and was the CCI confirming? Yes, it was. It was well above the zero line. Get in and look at that parabolic SAR. Keeps you in all the way until October of 2014. Okay, but you went, if we look at this, we went from around the 132 area up towards 200. Okay, a huge move. Now that's an index, that's a SPY, but if you want to look at a stock, let's go back to Bed Bath & Beyond, for example, okay, or I don't know, what stocks you want to look at. Does anyone trade any on the monthly? Home Depot, Nike, any of those? Huge moves. If you're collecting dividends along the way, you're selling covered calls along the way, what this is really just trying to make things easy for you. I'm extremely conservative, and I always just try to simplify things and make it easy for me to execute that order. Now, I've been doing this for a very long time, but even those of you just starting out, this is very, very easy to spot, not many rules involved. And with using that parabolic SAR, it's just a way to help you remain calm and stay in that trade. And even if you were to take trades with a moving average that's going sideways here, you're trying to anticipate the bigger move and trying to get in a little earlier. The nice thing about that, even though I wouldn't recommend it, because there's plenty of trades you'll run by with momentum in your favor. But even if you were to get in here and it goes against you, it's going to be a very small loss. And that's really the key here, is keeping your losses small. That's why I said from the beginning, you want to be risk averse. You want to think risk first. Okay? When you look at that entry here, look at where your stop is going to go initially. And only select an area that you're comfortable with. Okay? Usually that parabolic SAR, that dot, is right around that most recent pivot, which is usually a very tight stop. It works very, very well. Okay? So it's really nice and easy. Let's look at a few others here. REGN. I mean, look at this move. This was sideways for a while. Now, I'm sure many of you who are students of the market look at the basics for technical analysis. So let's talk a bit about the basics. Trend lines. If we take a trend line and we mark the previous high here, okay, right, we have this long sideways consolidation. Now we break that high. That's usually a good sign. The stock's about to break out, right? So look, let's just find an area here. The stock pauses. We find that area where the MACD goes positive, right here, this bar. Let me highlight it for you. Right there. Okay? Is the CCI above zero? Yeah, absolutely it is. Well above zero. Do we get a trade above the high of that candle? Yes, we do. We're off and running. So you get in right around 91 here on REGN. Okay? The parabolic SAR takes you to this area here right around 287. So from 91 to 287. Now sure, it was over a period of about 2.5 years, but boy, I mean, talk about that's a triple, more than a triple. You can't argue with that. And again, it really doesn't matter. 1 minute chart, monthly chart. Here's the 1 minute on REGN. It works very, very well. So it's a simple system based on technical analysis that puts the odds in your favor. Now, we've been doing these events with Investor Inspiration for a while. I've had the pleasure of being on here many, many times. I'm very thankful. And so for their 3rd anniversary event, we really wanted to do something special for everyone here. And there are ways to make this system even better and really put the odds in your favor. And we put together a pro training course on this strategy. And here's what I cover. It really builds on what I showed you today. So not only am I going to once again walk you through the full setup, entry to exit in this pro class, but I'm going to build on those 4 keys to day trading success that I talked about earlier. I'll go through them in length. I'm also going to show you how to quickly and easily calculate your risk-reward ratio on any potential trade candidate so that you're only taking the ones with a very high reward to risk ratio. Again, putting the odds even more in your favor. I'm going to walk you through how I select stocks to day trade with, and I'm actually going to share with you the watch list that I use most often for day trading. In addition to that, we'll talk about using the best time frames, elaborate on that, and not only that, but using multiple time frames. Very powerful. And then for you option traders, because I noticed there were many of you here, I'm going to show you how to day trade this with options here, how to really leverage those trades. Again, we normally sell this for much, much more, but in the spirit of the 3rd anniversary, only $3. Just go to tradingwins.com/now, and you can download it immediately there. I noticed there's a number of questions here. I only have a few more minutes. I'm going to ask Raul, our coaching coordinator, to come in and read some off for me so we can get through as many as we can. But it's tradingwins.com/now. It should be in your chat. You can click from there, and you'll get the pro course for $3. Let me just switch the mic over. Raul, good morning.
Good morning to you. I was trying to keep up with all the information that was being fired
I was trying to squeeze as much as I could in there with the time allotted, yeah.
You know what? You and I had chatted before the session a couple of days ago saying this is a great environment for day trading as we're leading up to the U.S. election because we have no idea where the market's going.
No, and you know, here's the thing that we have the election, you know, heading into the election, the market's gone flat completely because of all the uncertainty. But coming out of it, the opportunities are going to be endless. I think we're going to get a lot of action out of it, and it's going to be great. I can't wait for it.
All right, a couple of quick hitter questions as we go through. Kwok was asking, can you use the RSI instead of the MACD?
You know what? You can use other indicators, sure, but I found that this combination works very, very well. Just if you're going to do that, you know, test it without real money first. But you know, I can tell you that if you use this combination, it's pretty consistent.
Does this work on Forex? I'm sorry, I don't remember who that was. A couple of people.
Oh, yes. Again, you don't have to stick with stocks. You can use it on ETFs. You can use it on Forex. You can use it on futures and different time frames. It'll work across the board.
All right. Popular question. Vince, love the teaching. That's from Mark. Is there any auto billing on this program?
No, there isn't. This is a one-time. This is just a special for the 3rd anniversary. You know, just a token here, but the amount of content you're going to get in that course is great. Again, we went through it very quickly here. I didn't have a lot of time. There I take my time with it. I will be speaking much slower and covering more material. So and you'll have that recording so you can go back and watch it as many times as you like.
So with the course itself, we're big fans of Russell Peters. With the course itself, it's basically take it and go.
Take it and go, that's right.
In fact, it'll be delivered to you within the next half hour electronically. You can start watching it today if you don't have anything to do on a Saturday. It's a great course to get started. Popular question these sessions always is, what's your favorite time frame to trade?
With this system, the 5-minute and 15-minute. You know, mostly with some of the other systems is 15 minutes and hourly. But again, you don't have to have a favorite. What you want to do is make sure that that particular chart that you're looking at trends well and is fairly predictable on that particular time frame.
Okay, I've got a couple of minutes left. I am going to get your opinion on what's happening with the U.S. election, where you think the markets are going with it. Along with the same lines of, does it work on Forex? Same as futures, correct?
Yes.
Is there anything different that somebody needs to be considerate of if they're trading the E-mini S&Ps, etc.? I know that's a much faster moving market than if you're trading
That's the only thing. Like if you're going to trade the S&P E-minis at times, it does move much faster. It's a lot more challenging than something else. So if you're new to day trading, select something that's lower priced and moves a little slower just until you get the hang of it, right? But otherwise, it works. It works the same across the board.
Giselle had said earlier that this can also be applied to investing instead of trading. It doesn't have to be a complete day trading strategy.
No, it's not. Again, it's we have several strategies here, and this is the one that I use more than others for day trading, but it's based on technical analysis. It'll work on all time frames.
Okay, Paul says, how do you actually create a watch list for stocks that you're going to be, or instruments that you're going to be day trading?
Well, that's what I go through in that pro course. I walk you through it, and I actually share my list with you as well. So with that, you'll have my list.
All right. How do you feel about people adding their own indicators to what you've shown?
Again, you can by all means, but test it first. Get comfortable with it before you're risking real money on it.
What's the risk of adding too many indicators?
Is that you're gonna have a lot less trade candidates. You're gonna become a lot less active, and I can't account for its accuracy once you're adding new things. This one I've tested and traded in the past. I just encourage you to do the same before you start trading with other indicators.
Randy had asked, what platform are you using here? This was Thinkorswim.
Yeah, but these indicators are available on all platforms. So you can use
members who use TradeStation, Metastock.
Absolutely.
Any platform that you're using, as long as it has the basic. You're not using any indicators here that are so unique or proprietary that you wouldn't be.
No, they're all very common indicators. All we've done is adjust the settings. Okay, adjust the settings. I see a number of questions on the settings. Maybe I can just quickly recap.
All right, you got a minute.
So
because I do want to get the election.
Yeah, so the moving average is a 20-period simple moving average. The cloud is the default settings, and parabolic SAR is 0.02 and 0.2. MACD is 4.513, and the CCI is a 5.
Thank you for that. We're passing over earnings season right now, but earnings season will come again. How do you use this strategy leading up to earnings? I know you don't like to be in earnings announcements.
No, but
in the options portion on the pro training class, is that something you touch on?
Well, not specifically with earnings, because it really doesn't matter what the event is. All you want is some movement in the market, and that's why I say it's crucial to look at the chart and see that you do have a nice trend. So just wait till you see that trend and you have that momentum behind that move, and then look for a pause or a pullback, some kind of consolidation, and that'll lead into that opportunity to get in once again. You're just looking for some kind of movement. Look, even if you look at the S&Ps right now, even though it's flat on the daily time frame, there's days that have a wider range. But if you move to the lower time frame, the 1 minute, the 5, the 15, you'll notice whether there is some movement that day, and that's where the trade opportunities will come from.
All right, as the old saying goes, speed kills. In day trading, more true than ever. How do you deal with exits?
Well, you have to be comfortable with it. That's why you don't want to start, if you're just starting to day trade, you don't want to start on the 1 minute time frame trading the S&Ps. You don't want to do that. You want to start with a higher time frame. Look at the hourly, then move down to the 30-minute, move to 15, and so on, until you're comfortable. Because with every bar, if you're starting with the hourly, every bar takes 1 hour. You have plenty of time to go over your rules and make sure that everything is proper. If you're on the 1 minute, by the time you check all those boxes and convince yourself or make sure you're doing the right thing, it could have already moved away from you. So just get comfortable with it.
Okay, tradingwins.com/NOW now to get the special offers. $3, take it and go. I think you really will enjoy this.
Absolutely.
If you don't, let us know. We'll do something different for you. But I really think you will enjoy it. We've had this session now, is specifically designed in 2016 So I think you will enjoy it. Okay, last comment on the U.S. election. What do people need to know? And tell me where you stand on this.
No, I don't. I'm not going to tell you where I stand on it. The only thing is, from what I see, obviously, at least we thought originally that if Hillary were to win, I think the market wouldn't really react much because we expect more of the same. If Trump were to win, I think we see some downside initially, only because of the uncertainty. We don't know how he would run the government. So that's really more or less what to keep an eye out for. But if you're day trading, it really doesn't matter what the catalyst is that gets the market moving. All you want to do there is be in front of it when it is moving and spot those entries. So this is a great time to grab this now. Watch it a couple times before November 8th, so you'll be ready to go once the market starts really moving after the election.
I want to be respectful of everyone's time here. A lot of great speakers coming
Sure.
If Renee, if we have 10 seconds, I'll just get Vince to quickly recap the offer, how to get it, and we'll be done.
Sure. So again, the link is tradingwins.com/now. You're going to get the pro training course recording, and in that recording, I go through the full system, entry to exit again. I elaborate on the 4 keys to trading success. I tell you how to calculate your risk-reward ratio ahead of time so you know which trade is better than the other. I tell you how to build a watch list and share my watch list with you. We also talk about trading with multiple time frames and how to select the best time frames, and then of course how to trade this with options so that you can really leverage it. I hope you enjoy it. Thanks again, everyone, for being with us on a Saturday. It was a lot of fun, and a huge thank you to Investor Inspiration for once again having me on. Congratulations on your 3rd year anniversary. Hopefully we can do this again.